Hello, everyone, and welcome into crushthestreet.com. Looking forward to a great interview today. I'm going to be talking about precious metals and a specific opportunity, actually. One of the things that has been a theme here at Crush the Street for 2019 is this idea that we're dealing with this window of opportunity that's closing. I mean, gold $1,300 not too many months ago. Now it's $1,500. And people are scratching their heads as to what's going to happen here going forward. And I believe we're in for a really exciting bull market. So I have on the line John Anderson. He's the interim CEO and chairman of Triumph Gold Corp. The company trades on the Toronto Stock Exchange Venture under TIG, and on the US under TIGCF. John has been responsible for raising millions of dollars for Triumph Gold Corp, 35 million to be exact. He's the founder of Deep Six PLC, American Eagle Oil and Gas, and a general partner in Aquastone Capital LLC, a New York-based gold fund. So we're going to really get a boots on the ground understanding on what is going on in the precious metals market here in October of 2019. Without any further ado, John, thanks for coming on Crush the Street with me today.
Kenneth, thanks for having me. I really appreciate it.
Well, John, let's set the stage here. We're seeing here in 2019, 6-year highs in gold. Central banks in 2018 bought the most gold in 50 years. And we're set to break that record again this year with central banks. Let's talk about the gold environment. $1,500 gold. What are your thoughts?
You know what? We saw gold go up in 2011. So from 2001 to 2011, it went from $275 to over $1,900, and it was really catapulted after that 2008 crash. So 2009, 2011, it literally went from 900 and essentially doubled. We've had a really tough correction down to $1,000 twice. And now we're obviously on that uptrend. And you could just see where the movement on gold from a technical standpoint is going. And I think when you see it go through $1,900 again, it's just going to continue on. And why I'm doing what I'm doing with Triumph Gold is I have a very leveraged opportunity for that movement in gold. But I do believe that we are finally going into a substantial gold market.
You know, it's interesting. You took over Triumph Gold back in 2015 at a time when gold was really at that low, when it was hated in the depths and the brutality of the bear market. And, you know, let's talk a little bit about that time and how things have progressed specifically for you and what you're working on.
Yeah, 2015 was not a fun time. I'd raised quite a bit of money, as you said earlier in the interview, $35 million at that time. It was even more than that for a project that had really delivered technically and even in the markets. But after that crash in 2011 that we referred to earlier, from $1,900 down to $1,000 and then double dipped at $1,000 gold, unfortunately, the former management of Triumph basically fell into really tough times as far as the financing of the company. So that's where we took over. We knew what the asset was. We'd invested quite a bit of money ourselves, raised all the money for it, and saw a world-class exploration project that had a substantial resource on it. Knowing full well that we weren't getting value in the market for that asset at that time, we were going to sit on it and wait for $1,500-$1,600 gold, where coincidentally we are now. But since that time, we actually have really done a fantastic job developing the asset further and creating quite I'd say a splash in the market right now for what we've been able to do. And I think this is really only the start for what's going to happen for shareholders.
John, we're talking about the Free Gold project here. You guys, since 2015, drilled out the deepest and richest hole in Yukon history. Tell us a little bit about the significance of that for your company. I mean, obviously, you took something that was underdeveloped in terms of where it was, and then you guys have taken it to a completely new level here, which again could be strategic leverage for people who want to get exposed to a rising gold price, of course, and have some exposure to maybe a company that really hasn't seen its fair market value reflected in its price yet.
No, you're right. Hardly are we seeing the value. When we took that company over, we had 3 deposits on this Free Gold Mountain project. It is a district-sized project. It is 200 square kilometers. It's 5 times bigger than Manhattan. It had great infrastructure. That was the appeal for it. But it also had 3 million ounces of gold sitting on the property at surface, which was, in a normalized market, you'd be getting $20 to $30 market cap per ounce, which would put a significant increase to our share price currently. So since we weren't getting value for those ounces at surface, we looked for higher grade ounces. And what was causing the mineralization on those 3 deposits on this district size? So Tony Baresi, our current president, came up with these concepts in 2016, 2017, and confirmed it 2018. What we have is, we think, the source for the gold of those deposits, and we've got a really good understanding of it. And we hit substantially last year. At that time, they were the deepest and richest holes in the richest porphyry ever drilled in the Yukon, adjacent to those ounces. This year, we went further down. So, just to put it in perspective, the resources that we had were about 240 meters deep. Last year, we confirmed them down to be 600 meters deep. And this year, we confirmed them to be a kilometer deep, and different mineralization down below. So that's creating a lot of exciting from the technical standpoint. And what we've been able to discover is, from a technical standpoint, find these higher grade deposits in a very economic fashion. So we've just really scratched the surface of where this thing can go.
John, let's talk a little bit about what we've seen in the vicinity of the region there. Kaminak Gold in 2016, with a similar project, an actually inferior project, was bought for over $500 million. Currently, Triumph Gold is what, $40 million company? I mean, this is, well, talk to us a little bit about the potential here and what the market has really yet to see.
Yeah, that's a good point. When we took over this project in 2015, our objective was to sit and wait and not waste shareholders' money and dilute shareholders, because we have a resource, and we know those resources probably wouldn't get much credit until the gold was in that $1,500–$1,600 range, which coincidentally we're here right now. But in 2016, Gold Corp, which has subsequently been bought by Newmont Mining, purchased Kaminak, which is 40 miles northwest of us. They paid $520 million for it. It had a good low-grade resource. It had a feasibility study, so it was more de-risked than our project. And they're developing that project as it stands today. $520 million, essentially the same type of resource, not the infrastructure that we've got. So that's what started us working on the project 3 years earlier than we'd planned. If you've got a project that's worth $30 or $40 million and your neighbor gets bought out for $520 million, there's a market for it. And so that's why we've been developing the asset that we have. So is there incredible leverage compared to that transaction? Absolutely.
We have to point out too, Newmont came in and purchased 19.9% of Triumph, and this happened at 53 cents Canadian. Currently, Triumph trades for 38 cents. So obviously, there's a bit of an endorsement and a belief from like the biggest names in the resource sector in terms of what you guys are doing. So maybe speak to this a little bit too, if you would, John.
Yeah, sure. That investment came in a year after Gold Corp had purchased Kaminak for $520 million. and they approached us based on our first of all, our land package and our location. We have great infrastructure. They're a lot more remote than their project was, but they really liked the exploration upside that Tony had presented to them, and they invested $6.3 million in 2017. That bought them 19.9%. They've subsequently invested more money to maintain that ownership just last year, and it's been a great relation. They've added some great technical advice and expertise to what we're doing, but they know that we are more than capable of handling this exploration project and bring it up to a Newmont style project. And their endorsement's been fantastic. We also have other institutional investors as well. We've had Palisades Global, which owns 15%. They've been there since 2016 and added to their position substantially throughout the market. We've had great ownership through the Zijin Mining Fund. They have just under 10% of the company, as well as Gold 2000, who's always tried to maintain a 10% equity in the company. So great endorsement from real technical industry partners. And I think it's now time with $1,500 gold that we start to attract a lot of that retail that's out there and really unlock the value for this company.
John, in your years of experience in the precious metal sector, what does a rip-roaring bull market look like potentially going forward here?
You're looking at, other companies go up 10, 20, 30 times. You look at Great Bear Resources in Ontario, they've just had that kind of move. You look at Kirkland Lake in a bull market, pseudo bull market that started 2016. They've gone from $3 to over $70. All these companies that I'm referring to, Newmont, Kirkland Lake, all these, Barrick, for example, Kinross, they've got to replace their reserves, and they're not being able to replace those reserves. So they've got to buy those reserves. But what you basically see in a rip-roaring bull market is the equities start to get value for it. Right now, gold, it's great to invest in gold. You should. I truly believe one should have physical gold, but you're going from $1,500 to $1,600 to $1,700. That's a safe return, but the equities provide incredible leverage. Just to put this in perspective, the Huey or the XAU, which is the Philadelphia Gold and Silver Index, it started in 1981. It started at a value of 100. It went up to over 700 in the past. It is coincidentally now at 100, where it was 40 years ago. You're probably going to see that type of move again, where I've seen technical comments come out saying the XAU is going to go to 560 to 600 in the next 3 years. If that's the case, that's Barrick, that's Newmont going up 4 or 5 times in value from here. What that does to the little juniors that have incredible resources are astronomical. And we've been positioning this company to take advantage of that with, call it an essential real estate play that's got a substantial resource on it. And if I have to put it into a really simple term, in a bear market, gold stocks trade at 1 times net asset value. That's where they are right now, or book value. In a bull market, they typically trade at 2 times net asset value. And this is right from good analysts out there, like National Bank have said this in the past. But the real leverage is the gold price. So it's not about a Triumph going from 40 cents to 80 cents. This is more or less multiple leverage. So your 2 times NPV is great, but it's the increased profitability, the increased gold price, which gives you that real huge compounding effect in the gold stocks.
So having said that, then what do you believe to be the next catalyst for Triumph?
Well, the market's going to be the big thing. You do need that retail market and that institutional market, and that is starting to happen. But we have developed a plan really to develop our asset further. We've done 3 years of great exploration. We've only released the first 2 holes of this deep program. We've got 5 more holes to go that will go. They'll come out right up into the beginning of the new year. We've also got incredible exploration upside on a number of other projects. We didn't drill this year. We drilled last year, but we've expanded substantially in a very cost efficient way. So just on our property, our news, we've got a lot of catalysts coming out in the next few months.
And John, if you could speculate, or if there's kind of an exit strategy that Triumph would prefer, can you speak to that here? What is the exit strategy for the company?
Our exit strategy is pretty simple. We are developing what we think is a world-class exploration asset. As I said earlier, majors have to duplicate their resources, at least replace what they've got. Right now, with our historic resource, let alone what we're on to now, we are going to be a very, very attractive candidate. We've got 7 CAs right now with major mining companies. We have the most attractive bulk tonnage, we think, project in a very geopolitical safe area, being the Yukon. Our exit strategy is really someone is going to buy us. And we've been offered many times to carve off pieces of the property. We've been offered joint ventures. Our objective is, let's keep it a whole. We control the asset. We have really strong shareholders that buy into this vision as well. And at the right time, in a seller's market, we will sell this asset for sure.
Okay, John. So as we close out this interview here, why do you believe gold is going to go higher here in 2019, 2020? What are the reasons that you believe this to be true?
I think I know that a lot of doomsdayers out there and gold bugs say the US dollar is going down. It's not. It's still the reserve currency of the world. Gold right now is finally seeing its niche. It's acting as a currency with all this fiat money that's being diluted by governments. Hard assets are going to be invaluable. And I think, and I truly believe, one thing that's separating this market versus other markets, and you have to go back to the 1970s to really compare a really good bull market, is in 2011, when gold did go up to $2,000 or almost 2,000, and silver went to 50. The difference was you had oil that went from $20 to $140. You had copper go from 60 cents to $6. You had steel, iron ore, even do much more better than perform much better than copper. So on a relative term, gold did well, but compared to the infrastructure costs that create all these mines to operate profitably, gold greatly underperformed. Kenneth, now you're seeing the opposite happening. You're seeing gold start to move up. $1,500. It was $1,250 just a few months ago. You're not seeing oil go up from 50 to 60 to 70 to 80 to 140. It's sticking around. Copper, which I said went over $6, is hanging around 265. Iron ore is a fraction of what it was. So it's the perfect storm for gold and gold stocks, because gold is starting to go up. The infrastructure cost that creates these operating costs and development costs for mines aren't going up this time. And that's going to create the profitability that the gold stocks are going to really enjoy. And you can just see it in the stocks like Newmont, Barrick, Kinross, B2 Golds. Some of these leaders, their stocks are going to perform very, very well, I believe, when the financial statements come out. And that'll just really kick off the whole gold equity market. And we're so well positioned for it.
Yeah. And, one thing that I really want people to understand is this opportunity, because I think a lot of people have had post-traumatic stress from the last few years, watching gold go to 1350, in 2016, or, close to 1400, and then fall back down once again, and just to be underwhelmed with its movement. And I think even now with it moving up to 1550 and then back below 1500 just slightly as we do this interview, so many people are just so worried about it. But if we do go into this rip-roaring bull market, people are going to have to buy in at much higher valuations and be more excited about, a $2,000 gold price than a $1,500 gold price. So maybe as we close out this interview here, just speak to that, speak to the investor sentiment, the psychology of, trying to buy when it may not feel that good to get in, when there's a lot of questioning and denial and uncertainty, and one thing I will point out is all bull markets climb a wall of worry. And it's possible that that's exactly what we're seeing right now.
I think you're bang on. You've heard the term fear and greed, and essentially we're going through this fear stage right now with the junior gold sector and even some of the majors. People saw the gold go up above 1550, 1550, and fell back, and I think that's over. Again, I think we're going into a rip-roaring bull market, and I think once you go through that $1,972 amount, you're going to attract new buyers into physical gold. The junior stocks and the equities, it is fear and greed. You can go out and people are still buying Facebook and Tesla and the must-own stocks. Very few people own gold. Historically, Kenneth, in Canada, most people had 7 to 8%. Most funds had 7 to 8% set aside for gold and mining stocks. Right now in Canada, it's less than 0.5%. And when that picks up again, you're going to see the creme de la creme move up. Good companies and good geopolitical situations with good reserves and resources are going to benefit from it. That's what we have. And then we've got also one heck of an exploration upside. So I think, the creme de la creme, the real projects in good political areas will probably outperform even the majors right now.
Well, it's exciting stuff. John, if people want to learn more about Triumph Gold, what you guys are doing, where could they go and what can they expect to find?
Well, I think the best thing is if they went up to the Yukon and visit our project up in the Yukon, but that's not all that feasible for most people. Just go to our website, www.triumphgoldcorp.com, or get a hold of us directly. Very accessible, as you know, by email or contact us directly. My mobile number is on the website, and I have no problem speaking to people. I'm pretty darn excited about what the future is, and very proud of what we've done in the last couple of years to get here.
Very exciting. John Anderson, everyone. John, thanks for coming on Crush the Street and sharing your knowledge with us and introducing us to Triumph Gold Corp. Really do appreciate it.
And Kenneth, thanks for having me, and I look forward to talking to you again in the future.